Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Asian Sessional Eye Market Analysis and the Forecast webinar on 8th of May between 5 and 5:30 GMT. During this webinar, I'll be initially giving the forecast for this week, 8th to 12th of May, how exactly the market is expected to behave. And that will be given in detail, like session-wise forecast. So each session, Japanese, European, and the US session, how exactly the players are expected to make the moves in the market. So the initial component will be the forecast. Then afterwards, I will explain to you how we need to do the market reading, understanding the hidden agenda of the players. So if you learn how to do the market reading, you'll be able to identify the hidden agenda of the player, what they are trying to do from a given time, so that you will be in a position to take appropriate trading decisions. So first of all, you have to understand that. So for it, we have to note down the initial lows and the highs around 3:30 GMT and try to make use of it for further reading of the market. Then finally, I'll touch upon the trading strategy, namely how exactly the trading strategy limit the risk and maximize the profit. So ultimately, we need to understand that trading strategy is vital, because when we try to trade, our market reading or our understanding of the market can go wrong, or sudden events can happen as a surprise. In such a situation, how exactly we have to limit the risk, we should know. It is something like when you are learning to drive a car, you also try to learn simultaneously how to apply brake, how to control the car in the event of a requirement or an emergency. So if you learn all these three, then obviously you become a master in trading, and without anybody's comments or the analysis or advice, you should be able to trade on your own. So my main objective is that try to give as much educative information as possible so that the traders can trade on their own without depending upon others' market reading. Because it is a very simple concept that if you are hungry, only you can eat. All others cannot eat, and that can satisfy you. If you are hungry, you have to eat. So if you want to earn money from the market, then try to understand the tricks of the players in the market and try to avoid getting hurt again and again. That will be able to really help you to make slowly and steadily the profits. First of all, the forecast for you. So it is the second week of May, so the trending time. It is not trend reversal time, the trending time has started. So 8th to 12th of May, the market is expected to make a swing and rise move in general. And next week, third week of May again, as mid-month, they will try to make the swing and rise move. In this month of May, we'll come across low gains in the case of Euro and GBP. But you do come across intraday slides, and that is part of the game or the volatility of the market. So you can either do buy and sell or a sell and buy trade, depending upon where you are taking the position. If you are trying to take the position near the high, you can try to do sell and buy. If you are trying to take the position near the low, you can do buy and sell. Now, what they are expected to make in this week? If you understand the overall market moves, then you will be able to pinpoint that they are trying to make shift in trading zone on the upside. From the start of the month, from start of the year, they have been doing the lower level consolidation with a frequent downward stop at the extreme level at the lowest point. They accumulated buy position, but everybody was bearish at that time. They said that the market might further drop and US dollar is going to be the king. I was telling at that time, US dollar is a sleeping giant. So normally it wakes up for a brief period. Afterwards, we'll do come across the other majors gaining the levels. So this is how the players make the moves in the market so that they'll be able to consistently earn money from the other market. So they have to create the market sentiment or the market feel and induce all other traders to do sell and buy trade at the lowest level. If somebody says that, okay, it's ideal time to make a buy, then the trader might say, no, if you want, you do it, but I am going to do sell and buy trade. That is how they will create or induce the traders to say a situation, a bearish situation. But finally, what had happened? They gained the levels in the market. After gaining the level in the market, Euro and GBP, they started gaining more level quickly in order to bring in shift in trading zone. So this is what they do in the market. A lower level consolidation with a frequent downward stop and then start gaining the level one-sided on the upside. Then they start making the either way stop-ins. So either way stop-ins they will make, but they will not reach the lower level what they have been showing, but they will do in the middle level either way stop-ins. So middle level consolidation with either way stop-ins is in the process. Then afterwards they will shift the trading zone to the higher level and start making the higher level consolidation with a frequent upward stop-in. So we have a long way to go upward in the market. In the process, they will make either way stop-in to start with. So at that time, you can do either way trades. Sell when they are making a quick rise, buy when they are making a quick drop, so that you will make handsome profit in such wide range swing trades. So that we need to understand. In that process, they are expected to make a swing and firm up during that of the Japanese session, and then slowly slide during that of the European and the US session. And then many of the analysts will say that the market has already priced in the outcome of elections in France. But whatever be the attribute, the players make the moves in against of the expectations of the traders. When the traders have committed the positions and then later on expect the market to move in a big way, then the players make the move in the other way and trap the traders and stop them out. Then later on, they make the move in the expected line. So this is what is going to happen this week. Even though the trending move is on the upside, they will make very quick downward stop-ins during that of the European session today and tomorrow, and also day after tomorrow. Then on Wednesday, they are expected to make a deep drop in order to induce all the long holders who have taken the long position at the higher level to liquidate. Then they buy all the sells at the lowest level, then start gaining the levels. That is how they make the moves in the market. So they induce the traders to be bullish and ask them to take freely the buy positions then make one extended downward stop, and so that the traders will think that, oh God, by mistake I have taken a higher level buy, the market does not have a strength to go up further, and that is how they feel, and liquidate the long positions. And later on see that market pierce all the earlier highs and go further high in, to their surprise. This is what happening every time, but still people fail to understand how the shift in trading zone has to be read, or how we need to understand the shift in trading zone. This the study requires a specificity with regard to the market segregation. So we need to splice the market into several components. How? We can just cut it into that of the three different sessions, or early and the late sessions in each of the three sessions. These things are vital so that you'll be able to understand the time-bound moves in the market. If you don't do that and simply use the chart to study, then you will be simply looking for the intraday trend reversal based on MACD or retracement, etc. But ultimately, you need to understand it is a man-made market based on the time frame they are doing it. Why we fail to read such time frame? In order to avoid us reading such time frame, the players have widely spread the information. The market is trading like the Japanese session, the Asian session, European session, London session, New York session, etc., Pacific sessions, etc., so that the traders will not be able to really understand how the players have made the sessions in a given day, in a 24-hour cycle of the market. They are divided into three sessions, and if you understand the session timings, then you will be able to easily read their intentions. So that is why I have given it in such a way so that straight away from this time to this time, what trade you can do. Swing and firm up, you can do a buy and sell trade. Swing and slide, you can do a sell and buy trade. That way, you will be able to really take advantage of the market. If you've got any doubt regarding the forecast or regarding the market, you can ask me the questions in the question answer window here, FX Trade Forex live video window. I'll be willing to answer those questions. Now coming to the levels in which the currencies are expected to swing in this week, could come down to that 1.0750 area as an intraday drop and then start gaining the level. Already they have gained the level. They are expected to make either way swings at a lower level in order to induce the long holders to shed the long positions before making further rise. Then in the case of GBP again, they are expected to make the traders to shed the long positions before making the rise from 1.27 to 1.30 area. In the case of yen, 110.75 to 114.75 would be the swing levels. In the case of CHF, 9800 to 9925 would be the range. Then Canadian dollar would make for the downward move in the market. As I explained, that 1.37, 1.3799, 97, all those things, they're shown mainly to offload their buy positions. So they make one-sided gain quickly so that those who have taken the sell positions will feel that they are being trapped, and the charts will show earlier highs as 1.41. If it goes to 1.41, obviously we will not be able to withstand. That's what they think without using the hedging to limit their risk. Then what happens when such traders close their long positions, short positions, then automatically the players make the slide. Then they make some pullback so that the traders will think that the earlier resistance turns support and they try to buy near that of the support. Then they continue to make the drop respective of the market move. At the time, Euro and GBP might be making a drop, but USD CAD might also be making a drop. Last week, we have seen that Euro and GBP gaining, USD CAD was gaining, and also USD yen was gaining. Similar to that, they will make the move on the downside and induce the traders to close the unfavorable positions. So read the market carefully. For that, we need to read the intentions of the players more than anything else. In the case of Australian dollar, they are just hovering around the top 0.74, came down to 7386, and slowly they are expected to gain the levels. Now we'll come to the rubber market reading. I noted down the initial lows and the highs in all the four majors and two commodity pairs. So we will try to compare it with the current market condition. This is live market code page wherein you find currently where the currencies are. Here you come across the GMT time for you to understand that around 3:30 GMT where the market was, and currently 5:16 GMT where the market is, so that you'll be able to understand what the players are trying to do in the market. So Euro formed the low 1.0952 and 1.1022 is the high. They are not breached the low at the high. They are just making a swings in between. Then in the case of GBP, 1.2952 was the low. They just breached it by about 3 pips and then gone above, and 1.2990 is the high. So they made a brief downward stop and gained the level above that of the initial low. In the case of yen, 112.60 is the low and 112.97 is the high. They are not breached the low at the high. And in the case of USD CHF, 98.74 is the low, 98.04 is the high. They are not breached the low at the high. So here, Euro, USD and CHF, they are not breached the low at the high. Then in the case of Canadian dollar, 36.45 is the low. They just cut it by 1 pip, gone above, and 36.76 is the high. So here you find they just breached the low by 1 pip. In the case of GBP also, they breached the low by 3 pips and gone above. In Australian dollar, 73.86 is the low, 74.20 is the high. They are not breached the low or the high. So only in the case of GBP and Canadian dollar, they just breached the lows, indicating that they are expected to make wide range swings on either side stop and then start making the slide during the day. Stop making the downward slide during the day, from that of the European session against the expectations of the traders. And when the traders think that because of the elections in France, Euro could gain substantial level, but to their surprise, they could see Euro making a drop. So this is what the players do. They induce the traders to expect something and make opposite move. Okay, Brenner's got a question. Do you think Euro USD will have enough volume this week to reach the expected high? Yeah, Euro and GBP could make wide range swings in the market. So they will just induce the traders to take long positions at a higher level and then start making one downward swing and hit the stops. What happens once a person is stopped out, In order to earn back the lost money, he normally commits another position in order to earn back the lost money. That is a gambling tendency. Slowly, what will happen? The traders, without their knowledge, commit more positions in the market. So when there was an election, and if the traders have lost the money before that, then they will be cautious. Oh, the market might be very volatile during that of the election time, so avoid taking positions. Then once the outcome is there, then they know very well, okay, now probably the market will follow technicals. Then they will follow the technicals and take positions. And later on you find, to their surprise, their positions or their uh, positions are closed with loss. Then in order to earn back the lost money, they commit further. This is how you find that traders are being attracted again and again into the other market. It's something like how the honeybees are being attracted by that of the honeycombs. So they cannot escape. Those who are weak-minded, they become addicted to trading and continue to stick on to that other market. Those who are not having enough money, then even though they have the mind to enter into the market, their equity will limit them entering into the market. But those who have got resources for money, then they go in for the opening of the new account. So if you ask most of the traders who have been in the market for a longer time, then they will say simply, I have blown more than 3 times my accounts or 4 times my account, etc. That happens because they become addicted to trading without understanding that they get some sort of kick while taking position and talking about the market. It's something like taking a drink. And they don't understand it is short-lived and it is only detrimental and it does not give any support. So it is better to learn it as an art and use it as an art to earn money from that of the market. Then they will be able to consistently earn. For that, they need to control their emotions and need to control the urge to trade. Then you will find that they become successful trader. Now the recommended trades for today. Near that of the low in the case of Euro and GB, we can take a buy position and then book profit when they are making the upward move, and again take a sell positions when they are making a breakout, and then try to book profit during that of the slide. That way we can do the trades. And this being the second week of May, they are expected to make quick moves in the market. Automatically, the volume could also build up during that time. Okay, then a continuation in the question, would you say Wednesday and Thursday they will be the biggest move made? Yes, they will make one drop and gain, that sort of move, and that will be really surprising to the other market. What an amount of strength that the players have got by making about 100, 150 pips drop and 150 pips rise. That sort of move, they could do it in few hours. Then people will start accepting market is manipulated. So these are all the market timings. So here you find what I was talking about, the Japanese, European, and the US session. And in between the session, there are gap time. And each session is subdivided into early, mid, and the late sessions. Make a note of the timings of those sessions. And early and the late session, they handle the majors. Mid session, they handle the crosses. Watch carefully. You will be able to really understand how they are doing it. And also take position only in a currency wherein the spread between the high and the low is more than 40 pips, so that you will be able to make profit. Otherwise, they will be simply holding it. You might be testing your patience. Is there any other question? Okay. So let me show the focus slide again. So those of you joined late probably can make a note of the forecast. This webinar is being recorded and it's available in a fixed rate, and you can always YouTube. Good morning. What do you mean when you say swing and form up, swing and slide? Can you explain some more? Okay, swing and firm up means, say, the higher level about 15 to 25 pips moves. That is the higher level swing. And then slide, come to that other low. Slowly come to that other low. That is swing and slide. Then the next one, swing and firm up. Then they make about 15 to 23 pips. Swing or up and down move near that of the low with a brief downward stop and if needed. Then start gaining the level to that of the high. That is swing and rise or swing and firm up. Swing and rise, they try to go above that of the high and then continue to make higher level up and down moves. So I'll not be able to give you the exact pips of moves they will make, right? So it depends upon the volume. So instead of giving a quantitative value, I am giving a qualitative value. Swing near that of the low and then firm up. Swing near that of the high and come down. Then afterwards they will make the intermediary swing and come down further. That is how it is. Hope you're able to understand. Any other question, please? So firm up on the slide will be a move of about 25 to 35 pips. Then drop and rise of about 65 to 75 pips. So a drop means 60, 65 pips. It could come down. Rise means 60 to 75 pips upward. Okay, no more from YouTube. Since there is no question coming forward, I'll try to conclude the webinar. So this is the forecast for this week and the levels in which the currencies are expected to swing. This week again, you will come across the high level consolidation and come down a little bit, make downward stop and before making further rise. Next week, we will come across more upward move and more upward sharp moves could be seen. At that time, you can straight away do buy and sell trade. This weekend, you can do either way swing trades. Let me wind up the webinar. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back on Friday and review the forecast, what I have given it today, Monday, so that we'll be able to understand whether the players are moving the market in line with it of our expectations. That means the forecast is able to tell you beforehand in what way the market is going to move. Then the forecast becomes dependable. So I want you to understand the forecast is dependable Then try to make use of it for your trading. Here and there might be some errors or deviations. At the time, we can always use the trading strategy to limit the risk and maximize the profit. So wish you all the best in your trades. See you on Friday.